For today's Bart Chart, is oil price volatility the new norm? Take a look at this chart. It shows oil price volatility from 2007 to 2015. And right now, volatility is at the highest level since April 2009. There it is at the right-hand side of your screen. Now, oil price volatility troughed at 14.5 on June the 6th. 2014. That's the red circle. That's when it reached a record low in data going back to May 2007. Interestingly, that low came just 14 days before crude peaked last year on June the 20th before embarking on a 60% plunge through January the 28th. 2015. Now, oil investors are being whipsawed on a daily basis. On Wednesday, WTI crude slumped by 8.5%, its biggest drop since November, as U.S. crude inventories expanded by 6.3 million barrels to 413 million barrels last week, almost double analyst estimates, the highest level in weekly records compiled since August 1982. Rising U.S. stockpiles, of course, contributing to a global glut that pushed prices 50% lower in 2014. I've been looking at the stats in 2015. This year alone, crude oil has closed more than 3% lower on 8 occasions. It's closed more than 3% higher on 5 occasions. There's the volatility for you. Only yesterday we were talking about oil surging 7% on Tuesday to close at its highest level of the year, $53.05 a barrel. That was from a 6-year low of $44.45 a barrel on January the 28th. This is the bottom line. The bottom line is this: there's still an overriding concern about supply. That's according to Jonathan Barrett. He's CIO at Ayers Aligned Securities in Sydney. He says it's all about finding a base, and the volatility we've seen shows it's still trying to do that. Get ready for a new oil, a new normal for oil between $60 and $70 a barrel in the next few years. Those are the words of Eurasia Group, the New York-based consultant. Is oil price volatility the new norm?